NaaviGrow, and I appreciate all of you showing up today because see, stop loss or the perfect stop loss, as I would say, is something. It's a very boring topic. Everyone wants action. Everyone wants to talk about a setup. They want to talk about how to scan, what not to look for, and for everyone, stop loss is just a number. It's just a line which helps them protect their capital. But we at NaaviGrow, everyone, we don't just think what everyone obeys or obliges by. We think deeply. We don't think stop loss as just as a line or a number. It's not muscle memory. No, if I ask you why you place a stop loss wherever you place it, I'm damn sure that most of you won't have a data backed logic, or you won't have the conviction to back your answer. For everyone present here, stop loss is just a muscle memory. स्टॉप लॉस क्या करता है? जस्ट हमारा कैपिटल प्रोटेक्ट करने के लिए हेल्प कर रहा है. 4-5% नीचे लगा दो, दैट इज इट. बट नो वन इज थिंकिंग डीपली, व्हाई आर वी प्लेसिंग अ स्टॉप लॉस देयर? We put in hours to scan, to look for the to find that tradable opportunity. But this one mistake of randomly placing a stop loss can cost you a great trade, and that affects your confidence, that affects your mental capital. And when we get towards the end of this session, I'll show you what a perfect stop loss is. But prior to that, I want to build upon what a stop loss is. I want to show you that a stop loss is not just a line. It's not just a number. It has a lot more to it than we believe. Spoken to different traders, and see, this random number, this leads to confusion. But before we get to that, we'll talk about why we use a stop loss. Can anyone tell me why we use a stop loss? You can type it in the chat box. See, most of us, we use a stop loss to protect ourselves. We want to save our capital and we don't want emotions in play. But that is not the exact way of thinking what a stop loss is. It is just a way of accepting that, yes, we were wrong. See, as a trader, we'll be wrong most of the times. If I talk about myself, I am wrong 70% of the times. I'm only right 30%. That is my win rate. And losing is a part of trading. But you cannot be always right. It is about protecting yourself when you're wrong. And stop loss is a way of doing that. It kills the emotions before they kill you, before they reach to you. Because see, as a trader, it is very easy to fall into the trap just this one time. This one is different. Ye turn ho jayega. But we all know how that ends. Without a stop, our fear and hope, they take over the best of us. And this stop loss, this line, this forces us to act rationally and not emotionally. It protects our mindset. See, as a trader, you don't have to just protect your financial capital, you also have to protect your mental capital. Because see, one massive loss can destroy your confidence and the discipline. See, small losses over time, they don't affect you. They can be survived. But one big loss, it can take away everything from you. And see, it is easier to bounce back when you take a hit financially. But when you take a hit mentally, it destroys you. And that is why you have to save that mental capital to be a stable trader. So stable mental capital is always is guaranteeing you that you will be stable in trading. And see, this is the primary reason we use a stop loss. We are just protecting ourselves because we will be wrong. We have to accept that fact. It kills our emotions and it protects us over the long time. This is what the conventional knowledge says. And to prove it, to back it, let's assume that you bought a stock, and we'll not name stocks. We'll just say that you bought it here. I'll mark it for you all. You bought it here. It moved up after you bought it, but you never placed a stop loss. You never had that line placed. You never had a hard stop. This is what happens when you don't have a stop loss. The stock is down 30% from your entry. Just imagine how much money you would lose if you did not place a stop loss. This forces you to place a stop loss because it is a defense. It is your defense. It is your survival kit. If you don't have a stop loss, trust me, you won't survive. I think Ed Sekota said this: cut your losses and you might survive in this game. This is the primary reason you use a stop loss. Another example: you bought this right as it was breaking out of this level, but you never placed this stop loss. Never. It moved up, it fell. Right now, you'd be in a hope that yes, it is in a tight range, it might bounce back and it might move up again. But that is not what happened. Now it is down 20% from your entry. This is the truth. If you don't use a stop loss, you will end up taking losses, and this will destroy not only your financial capital, but your mental capital. And because we all know that as swing traders, we will be wrong. Even the best traders in the world don't have a win rate over 40-45%. Then how can we expect as new traders to have a win rate over 30-35%? I have been doing this for a long time, and I can tell you that even in a good market, I have never had a win rate of over 40%. And I have accepted that fact that yes, I will be wrong. I am okay to make mistakes as long as I lose very less whenever I'm wrong. I'm not afraid to lose because I'm losing very little whenever I'm wrong. Can anyone tell me which stock is this? It was in news for all the wrong reasons. It broke out, it moved up, but we never had a stop loss because I think I saw this on Twitter. अगर stop loss लगाओगे ही नहीं तो loss book कैसे करोगे? You won't have a loss until you book it. Right? This is Gensol. No matter how good the company is fundamentally, no matter how good the order book is, no matter how educated the founders are, the price is the ultimate truth. The price pays, it leads. If you did not place a stop loss, you'd be down 70%. 70% from the entry. Imagine how much would you lose. Imagine that. And this is the reason why people leave trading, why most of the investors lose money. This is the primary reason. They don't use the line of defense, they don't cut their losses. Because of this, they're out of business. Small losses are part of the game, but big losses will end your career. This is a fact. If you don't take small losses, if you are not comfortable taking small losses, that one big loss will take away everything. No matter how good a trader is, if he or she does not respect risk and is not consistent with taking smaller hits, he or she will lose everything. This is a fact. And bouncing back after taking such a big hit is very difficult. Financially ho jayega, but mentally it it takes a big hit and it takes a lot of courage to bounce back, and not everyone can do that. This is the reason we use stop loss. And it not only protects your money, it is protecting you emotionally. And this is enough to tell all those people who do not place a stop loss that it is your line of defense. One trade cannot make your life, but it can end your career. This is the reason we use a stop loss. I hope it is clear. Now, confusion. See, as a trader or in any business, you can afford to be confused for a while. But as a trader, you cannot afford confusion. Confusion creates long-lasting damage. And see, confusion for a trader, it is the biggest enemy. When a trader cannot take decision, he or she is finished at that point. Because see, as a trader, whatever we do, it is based on our decisions. And if that decision is not backed by data, like if when I asked you, how many of you place a random stop loss of a fixed percentage, like 4-5%, yeah, ये तो hit होगा नहीं. If a big trader said that 8% लेना चाहिए, now we've come down to 4-5%, बस अब 4-5% पे we're restricted. We still don't have data to back it. Is it enough? Should we reduce it? Should we increase it? So all this leads to confusion. And if I ask you, how many of you have frozen when it comes to execution just because of the fact you were confused? There's a stock, you have to execute it at 9:30, 9:35, whatever the time is, but you froze. क्यों? Because you were confused. Stop loss कितना रखना चाहिए यार? The stock is already up 3% in the morning. अब 3-4% का रखूंगा, it might hit my stop. Is it too tight? Should I increase the stop loss? So all this confusion, this creates damage. And trust me, when things work, अगर ये एक even if you follow a wrong process and it starts to work, it builds a very wrong foundation. Just imagine you're following a wrong process, you're doing things wrong, but it's still rewarding you. You're building bad habits. And unlearning things for a trader is again one of the most difficult things, because once a foundation is built and you have positive feedback on that, you build on bad habits. And I love this line: stops without a reason lead to exit without a chance. Now, when you place a stop loss and you don't have a logic, you don't have data, you don't have executional data to back it, you're just placing a random stop. And that exit that it gives you, it gives it without a chance. Now, you're not giving a chance for the trade to perform. And that is the primary reason most new traders get whipsawed. Most traders, they know why they're placing a stop loss. Like we just discussed, they know that it protects you, but they don't know the logic that why are they even placing that stop loss. And because of that, they never have the conviction and they are always confused. And the state of confusion creates damage. These random stop loss placement that often new traders do, they kill a trade even before it, even before you give it a chance to work. That is the reason I said that stops without a reason lead to exit without a chance. So your random stop loss often kills a trade even before it actually begins. And stop loss cannot be a random number always. So if you're using a stop loss of, let's say, 4% flat fixed stop loss, see, uh, it might work for you, but mathematically, historically, it does not make any sense. You need data to back it. And if you can show the data that yes, then I'm up for discussion. But trust me, what I have found over the years and over the deep dives that I've done, you cannot have a random number as your stop loss always. Without data, you panic. And when you panic, you exit and you get whipsawed. Just be honest to yourself and be accountable, and drop a message in the chat box if you have faced this problem, and if you have gotten whipsawed in a trade just because you placed a random stop loss. How many of you have been through this, tedious? Yes, Ravi says often. So see, when you don't have the conviction or the data to back your decisions, because at the end of the day we get paid to take decisions and not be confused. So when you have the conviction and the data, you never panic and you never get whipsawed. This is what I'll show you, that the perfect stop loss exists if you're willing to accept it. And a quick tip here: whenever you place a stop loss, just ask yourself, if this level hits, is my reason for entering the trade no longer valid? इसका मतलब ये है, whenever you take a trade, just अपने आप से आप ये पूछो that if this stop loss hits, that if this level is taken out, is the trade no longer valid? Because often we exit a trade just because of our bias, just because of a random stop loss. Maybe the trade is still valid. So go after this session, go back to your journal and study all the trades that you've taken over the years, over the months, and just see for yourself, if you exited and the trade was still valid, what could you have done better to avoid getting whipsawed? So the gist of all this is that confusion creates damage, and as a trader, you need data, you need conviction, and you cannot have a random stop loss because it will kill a trade and it will destroy that impact on your portfolio. Now, can anyone tell me what silent trade killers are? I'll give you a hint. There are two things that kill a trade before it actually begins. And I know it is related to stop loss, but stop loss is not the answer. You can type it in the chat box and tell me if you know what the silent trade killers are. And these two things, what they do is they play with your emotions. And these are two strong emotions that often take the best of all traders: fear and greed. These two, no, it's not revenge. It's just fear and greed. And I'll tell you why. Fear of not sizing up. How many of you regret that, yaar, और पैसा डालना चाहिए था stock में, it moved up so much? Or you see someone on Twitter, he's sizing up 40-50% of his account in one trade, and you get that FOMO. यार करना चाहिए. If he can do it, even I can do it. I'm assuming that many of you, have faced this, wherein you just fear that, yes, if I am not sizing up, I'm not a good trader. Trust me, this is not how you look at things. This is not the truth. You are a good trader even if you're not sizing up big. But because of this fear, new traders, they choke their trades up. If you use a tight stop loss, it's obvious that you can size up big, but using a tight stop is a skill that is developed over time. It is not achieved overnight. And sometimes they don't choke the trade, they just blindly oversize and use the normal stop loss that they have. And because of this oversizing, it kills you as a trader. So fear of not sizing up. Similarly, fear of losing money also suffocates a trade. So many people fear that I am taking this trade and it will take up my capital if I don't move my stop up. And they blindly just keep moving their stop up. And because of this reason, they choke a good trade. You have to let the trade breathe. And because of this fear, they end up losing money in any case. Then it is the greed of fast profits. So it's again obvious. If you tighten up your stop, you can inflate that size and you can get those fast profits, that those fast R multiples. But there's a chance that you might get thrown out of that trade. Now, see, if you're experienced, if you have the data, you can tighten up that risk. But if you're just starting out, if you don't have the data, you have to let the trade breathe. And you know how I realized this? In the previous session of progressive exposure, we discussed that your average stop should be, within the range of 3%. But later I realized that I cannot fix a stop loss for everyone. Even I started out with a wider stop and gradually scaled down. And even now, there are times wherein I also take a wider stop. So I wanted to tell you all that this is not necessary that if you have a small stop loss, only then you can make money. Even with a wider stop loss, I'm not saying 15, 20%, even with a 6, 8%, 5, 6% stop, you can make money if you know how to do it. So don't let these two emotions take over you. These are the silent killers. And you know how you'll realize it? Again, go back to your journal, study those trades, study when did you increase the size because you were fearful that you might miss the rally. When did you tighten up the risk just because you did not want to lose money? When was the last time you followed someone on Twitter and blindly placed a random stop leading to a loss? When was all this happening for you? Go back and be accountable. जाके देखो ये कब हुआ? Because when you have answers to these questions, only then you can trade fearlessly with conviction. Because see, good trades, they need room. You cannot make everything in one day. Good trades need room to breathe, and your fear and your greed suffocates them. See, a trade is valid, but because of these emotions, you end up taking a loss in any case. And this has happened with me, and I'm assuming this has happened with everyone present here because there's nothing new in the markets, and we get influenced by people on Twitter. See, people have spent years to refine their process and reach to the level where they are trading right now. If someone is trading with 1 or 2% stop losses or 3% stop loss, it has taken time. Look at me. I started out with wider stop losses. Eventually, when I got the conviction and the data, I then slowly and gradually reduced them. But you are a new trader, you're just starting out. You cannot expect yourself to size up big. See, the end goal should be that 20 to 25% of the account should be in a trade. That should be the end goal. How you do it, it is up to you. Don't let someone online influence you into doing things that will cost you your capital. I have done that mistake and I don't want you all to do that mistake. Don't let fear and greed come into play and destroy your hard-earned conviction and the process that you have built over the time. Just build a system, respect it, trust it, and follow it. This is a primary reason people kill their trades. Another reason, when fear and greed come together, there's one thing. This one thing is guaranteed to make you this influences you into taking wrong decisions, and we just discussed that. Can anyone tell me what that one trading element is that influences your decisions into taking random risk? Yeah, you're right, FOMO, but that one element which directly influences news, no, it is position size. I'll ask you again. How many of you have faced this emotionally, wherein you see someone size up 40-50% of their account in a trade, and you on the other side are testing waters with 5-6%, 10%? Does that make you fearful of losing the rally, or does your greed come into play and you end up sizing so much that it makes you jumpy and it makes you fearful of losing your capital? And again, this is again nothing some new. It has happened to everyone, and it is the most common mistake that everyone does. See, if someone is sizing up big, good for them. Move on, focus on your process. Build a system that you trust. Build a system that you have seen work, have seen that works historically. But when you're fearful that you might miss out, see, you don't have a system. You have to go back to the drawing board and understand that yes, if someone is trading with a tighter stop, he or she can have big size. If I, on the other hand, I am trading with a wider stop, I can have a small position, but it is okay. Starting small is okay. Normalize it. Don't feel the pressure to size up from the start. See, Just imagine you 5 years back, when you were not in the markets actively, when you did not know what swing trading is, when you were adding to a stock as an SIP, 5, 10,000, a lakh, and slowly, gradually scaling up. Even then, you made money, right? It was slow, but you did make money. So now you have the knowledge, you have the data, but you're fearful that you're not sizing up. See, that is stupid. See, that is a guaranteed way of losing money. You cannot be influenced by someone who's sizing up big. It is okay to size up small. It is okay to scale up small. Scale as you go. Add to a position. It is not criminal if you add up to a position when after it moves 5-6%. Never pile in all at once. This is a note for all new traders. It is okay to start small, normalize it, and don't hurt your account just because you are influenced by someone who's sizing up very big and very abnormal. Good for them. Move on and focus on the process that you've built. See, and you can, even though I'll share this with you, I'll post the session, but write it down in your handwriting and paste it somewhere that you'll see every day. It's easy to get caught up in trying to make everything, from one trade. But successful trading isn't about hitting a home run every time. It's about conditioning yourself for consistent and long-term growth. See, by long term, I'm not telling you to buy a stock and hold it for the rest of your life. I'm just telling you that build a process, build conviction around the process that you can follow for the next 20-25 years. You cannot size up 50% for the rest of your life on every trade. It is not scalable. And people who say that, you know, you have a small account, that's your edge, you have to size up initially. See, that is okay. If they can do it, good for them. But most new traders, even when they're starting out small with a smaller capital, they're still fearful of losing money. Just imagine you're sitting in your room, you're sitting on your laptop buying a stock, and within a few minutes you hit your stop loss and you lose money. For a new trader, it takes a toll. Emotionally वो थोड़ा affect करता है initially, even though the capital at risk is very small, but affect तो कर रहा है ना. Just imagine doing that with a very high position size. It will destroy you emotionally. And like I've said earlier, emotionally destroy होने के बाद bouncing back is tough. That is the reason fear and greed को side पे रखना है. We have to build a process, we have to build systems wherein we are comfortable taking a position. Now just imagine you're not comfortable taking a position of 20-25% from the get-go, but a so-called trader on Twitter has said that no, you have to size up 20-25% or you're not a good trader. अब तो benchmark ही change हो गया है. You have to size up 30-35%, 40%, only then you're a good trader. See, even though that is right, you have to size up, but you don't have to necessarily size up from the get-go. You can start small. See, I start small. I never risk more than 0.3% of my capital, and gradually I scale up. I've told this in the progressive exposure session as well. But when when you're seeing someone sizing up so big, uh, it just creates a doubt in your mind. You question every aspect of your system, and you change your process, change your system, and do things that are not right. So you have to be normal in starting small. Just condition yourself, because the road to consistent growth, see, it requires a steady, and you have to be okay with executing trades. They should be well executed, and you're okay with not having one time big breakthroughs. If you want consistency, if you want to do this for the rest of your life, you cannot be affected by someone who's doing this, on Twitter, showing his progress. And it's his life, it's his process. You have to be okay with that and just follow what you have built for yourself. If you're getting affected by someone else, you don't have a process, my friend. You have to have a process first and then get into the markets. So the gist of this whole slide is that fear and greed affect your position size, and your position size is directly related to your stop loss. So you choke up the trade, you either give too wide of a SL or too less of an SL, and you get out of a trade, you get whipsawed left, right, and center, and you are conditioned that starting small is not okay. But it's exactly the opposite. You don't have to pressure yourself to size up from the start. This is what I want to put across. And your mindset affects the stop loss. So the way you think about money, risk, and trading is directly related to your personal lifestyle and your mental conditioning. So just imagine you have a well-settled big business and you're just trading, you're just starting out. you won't be affected by taking multiple random hits, because you know that trading is not my way of sustaining. It is just a way of building wealth, and of course I'm just learning. So that said, it affects you. Your mental capital is not affected. Your finances back at home affect you. And see, you have an unfair advantage of having a job, of having a business, or having parents if you're a student. You don't have to earn money every day. So your stop loss is directly related to your personal lifestyle and your mental conditioning. So whatever you decide for yourself, it is in line with your background. So taking an example, just imagine a guy who has financial issues back at home. He might not be okay with taking multiple hits. He might want a sure shot way of making money because he's not okay taking a stop loss. He already has a smaller capital, and taking a stop just affects his mental capital. So that is how your background, your lifestyle, your mental conditioning affects your stop loss. And it is very important for you to ask yourself, why are you trading? Now, I know right now you all might be questioning your decision to attend this session because nowhere I'm talking about where to place a stop loss. I'm not showing charts. But trust me, by the end of this session, you'll understand why I was talking about all this, because these are the primary reason that affect your stop losses. Just ask yourself, why are you placing a stop loss? You will have an answer to that, but you'll not have an answer to where you're placing a stop loss based on some data. As of now, you're just copying someone else's process. See, it's okay to copy, but post a certain level, you have to personalize it. So first, you have to understand your why. Ask yourself, why are you trading? Is it to generate income? Is it to build wealth or achieve financial freedom? And see, you all might have different answers, and every answer would have a different placement for a stop loss. Just think deeply about this. Your trading goals are directly or should directly be aligned with the execution framework. So, as a full-time trader who's trading for a living, I want to churn my portfolio at all times so that I can constantly keep my equity curve at all-time high. But for most of you who have a job, who are just trading to build wealth or achieve financial freedom, you can afford to let your winners run. You can achieve to give afford to give them a wider room, so that aligns with your trading framework and your execution. And when I show you what a perfect stop loss is very soon, you'll understanding your why you're trading is very important, because it is the starting point of your framework. So you start off with copying a framework. Like many of the traders, they copy a framework of let's say Christian Kolomagi, placing a stop loss at day low. But do you have the data or the conviction to back it? Have you gone through thousands of charts, and have you executed thousands of trades to call it your framework? So you need to personalize it before, actually after copying that framework. And your framework should fit your vision, your goals, and your risk tolerance. Trading, is all about finding opportunities, and your job as a trader why you're trading is to find opportunities and execute. But what happens is, you find a great stock, you find trade ideas, but because of your poor execution, you ruin your results. And without a solid execution plan, even the best of opportunities can turn into losses. And I'm assuming that this has happened with everyone, wherein a random stop loss, gets you whipsawed out of a trade, and that trade continues to move up, and you're sitting out, seeing that trade, move up 20, 30%, 40%, and you were out just because you did not have a solid execution plan. And that opportunity, which made money for people, is a loss for you. This is the reason why most traders lose money, because they don't understand why they're trading. So after the session, just reflect upon this. Now the interesting part: types of stop losses. See, there are two types of stop loss. One can be technical, and other is mathematical. And I'm assuming most of us here present here know what a technical and a mathematical stop is. So I'll not get into what they are. I'll just show you what the types of a technical stop is. So a technical stop can be a structured based stop, which we'll discuss in this session. It can be volatility based. So these are the two types of technical stops. In this session, we'll only discuss structure based stops. We'll not discuss volatility based because it will take a lot of time. Mathematical stops again can be of three types. First, it can be a trade metric based stop, which is based upon your math. It can be volatility based, and it can be a fixed percentage. I'm assuming that most of us here use a fixed percentage stop. Like 4-5% stop is comfortable. 4-5% तो hit होगा ही नहीं. अगर हो गया तो in any case बहुत volatile है, निकल जाएंगे. This is the reason that most new traders give themselves that yes, percentage fix कर लो and stay consistent with it and result आपका consistent होगा. But this is not how maths work. You don't have a data to back that fixed percentage that you're using. But again, we'll not get into all this in this session. We'll only discuss what a structure based stop is. This is the starting point of everything. See, if you understand the structure, if you understand the perfect stop loss or the ideal stop loss, you won't have to go back to the traditional way of looking at stop losses. Also, with the model book that you'll get, over 50 stocks, from 1998, then 1999, then 2000s, several examples from 2015 and 17. So you will get conviction as to why structure-based stop losses are better, and they are the foundation. They help you trail efficiently. They also help you reduce your R multiples. That is the reason I call this the perfect stop loss. Because see, स्टॉप लॉस सिर्फ एक लाइन नहीं है, स्टॉप लॉस सिर्फ एक प्रोटेक्ट करने का टूल नहीं है, इट इज ऑल्सो मैथ. योर stop loss is technical and mathematical. It should be that way. That is what a perfect stop loss is. I'll also explain why taking a full stop loss is a decent way. But if you can understand the math and reduce your stop loss by even 20-25%, like if your stop loss is 4%, that is 1 hour. If you can reduce it to let's say 3%, your average, if you cut your losses on average at 3%, how it improves your net gain. I'll also explain the math behind it, and then we'll discuss 50 charts, and I'll give you the model book for you to study it to understand what a perfect stop loss is. So perfect stop loss is both mathematics and structure. So whenever you combine the trade metrics, that is the math behind trading, and the structural volatility of a stock, that gives you a perfect stop loss. And when you combine these two strong elements, it gives you dual confirmation. It gives you conviction to hold that trade. And traders, like we discussed, cannot afford confusion. So when you have conviction backed by data, you will never get whipsawed out of a trade because you are following both maths and the structural volatility of the stock. A perfect stop loss is not just a level. It's a starting point of a framework. So when I tell you what a perfect or an ideal stop is, you might say that yes यार ये तो पता था. You might think इसमें नया क्या है, but it is just a framework to start your your deep dive. It is not just a level. It is a foundation for your strategy and not the strategy itself. But what exactly is the perfect stop loss? It's the previous day low. Now, why the previous day low? Previous day low is the ideal stop loss. It's still not the perfect stop loss. When we get to the charts, I'll show you how you define a perfect stop. Your ideal stop should be the previous day low because it makes mathematical and structural sense. Why? Just imagine, when was the last time a breakout happened and it broke the previous day low? Study any winner and you will see that previous day low is rarely broken. But even then, we hardly follow this fact and we are still focused on that random stop loss placement, and it affects our trading, it affects the overall maths behind our trading, and we get whipsawed. Trailing from the previous day low, post breakout, it becomes very easy because we know as soon as the stock moves in our favor, we know how to trail it. And when I show you the charts, I'll show you how exactly trailing is efficient when you place your stop loss at previous day low. Now, a disclaimer: previous day low is not a strategy. This is not a magical tool. Even this gets violated. But why I am so sure and why am I calling this a perfect stop loss? Because most people would say that there's nothing perfect in trading, but trust me, this is a perfect stop loss. And when I show you the charts, you'll understand why. When you have a setup, when you have a system, when you build that system from scratch, you have that conviction. And this is why I'm telling you that this can be a very strong foundation for your strategy because it makes both mathematical and structural sense. Like I said, stops can be of two types. It can be technical, that is structure based, or mathematical. And the perfect stop loss that we're discussing right now, it combines the best of both worlds. And it just makes sense to start using it as your foundation and not the strategy. Now, the perfect stop isn't only a technical decision, it's a mathematical advantage. Now, just ask yourself, when was the last time You took a hit and it was less than 1 hour. When was the last time you placed a stop loss? The stock hit your stop loss, and at the end of the trade, the net impact was 1 hour or less than 1 hour. I can guarantee you that whenever you take a trade, जब भी आप कोई ट्रेड ले रहे हो, उसमें कभी भी आप 1 hour लूज नहीं करते. You always lose more than 1 hour. बिकॉज उसके अंदर आपका चार्जेस भी आते हैं, स्लिपेज भी आती है. बिकॉज इट्स नॉट नेसेसरी ना दैट यू प्लेस अ स्टॉप लॉस एट 100 एंड इट एग्जीक्यूट्स एट 100 ओनली. थोड़ा ऊपर नीचे हो जाता है. बिकॉज ऑफ दैट यू लूज, और यू ऑलवेज लूज मोर देन 1 hour. सो ये 1 hour क्या है, ये अगर सपोज आपने 1000 रुपीज लूज करने थे एक स्टॉक पे, नाउ यू माइट बी लूजिंग 1100. बट यू माइट से यार 100 रुपीज में तो क्या ही हो जाएगा. जस्ट इंक्रीज योर कैपिटल एंड सी वॉट हैपन्स एंड सी द नेट इम्पैक्ट. When you go and study the math over 500, 600 trades or 1000 trades, the impact is huge. That is the reason a perfect stop loss helps you reduce the stop loss from your reduce the hit from 1 hour to at least zero point 0.7, 0.8 hour. So, like I said, ideal stop never exceeds 1 hour, but whenever we trade, we get slippage, we have to pay charges. So when you include all that, your the ideal stop always exceeds 1 hour, but a perfect stop is often cut closer to zero point 0.7 hour. This just adds meaningful edge to your system. Now, by simply reducing your average loss from 1 hour to zero point 0.7 hour, you can improve your net gains by nearly 90%. अब इसमें मैंने ना आपके विन रेट की बात की, ना मैंने आपकी प्रॉफिटेबिलिटी की बात की. वी नो दैट आउट ऑफ द 10 ट्रेड्स वी टेक, 7 में हमारा स्टॉप लॉस हिट होगा ही होगा. सो व्हाई नॉट रिड्यूस आवर एवरेज लॉस? आई एम नॉट saying you telling you to place tighter stops. Whatever stop loss you take, उसको 30% reduce करो after you take the trade. कैसे करना है, we'll get to that. But if you do that, it improves your gains. Now here's the math. So this is the expected value. This is the expectation out of a trade. So when you take a 1 hour loss, the gain per trade, the net impact per trade is zero point 0.2 hour per trade. So this is your win rate, that is 40%. This is your average win. This is just an example, 2 hour. Your average loss, losing rate, that is 60%, and your average loss is 1 hour. So that gives you, if you do the math, it gives you positive expectancy of 0.2 hour. But now, if you reduce your average loss to 0.7, just see what it does. Your expectancy, how much you make per trade, increases to 0.38 hour, roughly zero point 0.4. It nearly doubles. So without even changing your win rate, without even changing how much you gain per trade, by just reducing how much you lose, because it is guaranteed that you will lose, just managing that, it improves your net gains by 90%. How amazing is that? So if you understand both the technical structure and the mathematical advantage that the perfect stop has, you will never look back. This will become your system, and will add a meaningful edge to your system, because it has helped me. And I'm assuming that if you follow the process correctly, and there's nothing very technical with the process, you just have to place the stop losses at previous day low, and try and reduce the average loss over the period of trades that you take by 30%. And but there's a very unique thing. Even if you don't reduce the stop loss in one trade, so if you take 10 trades and उसमें से एक दो ट्रेड में आप 1 hour lose कर रहे हो, that is okay. But if you try and work the math and बाकी सब trades में आप less than 1 hour lose कर रहे हो, it just takes care of the entire framework, and तब भी you'll see a very significant improvement in your net gains. So a perfect stop loss never exceeds beyond zero point 0.7 hour as per my system. Okay, then I'll just move on to the charts. Now, this is JBM Autos from 2017. Now, we'll not get into how you enter. Let's assume you enter at the previous day high. We'll keep this simple so that there's no discretion. You enter at the previous day high. It's simple that you bought here. Your stop loss should be at the previous day low. It is that simple. Now, we don't know post the breakout day. Like, I'll just show you. अगर मैं बोलूं ब्रेकआउट यहाँ क्लोज हुआ उस दिन पे, डू यू नो कि उसके बाद वो मूव करेगा ही करेगा? डू यू हैव कैन यू गारंटी दैट?
No, no, no.
No. So this is another way of how you can reduce your stop loss, because there's always a chance that it reverses and hits your stop. So if the breakout is strong, you can always move part of the stop loss, a little higher to keep the maths in check and to reduce your loss from 1 hour to zero point 0.7 hour. But the perfect stop loss was obeyed here. It broke out. The previous day low was never hit. Same, broke out. Previous day low was never hit. And this happened in 2017. So we'll not just take recent examples, we'll also understand past cases. This is ACE Action Construction. This was the IPO. So let's assume you bought it here. Previous day stop loss, it was never hit. You bought it here, again, never hit. It continues to move up. So whatever your system is, if you're a breakout trader, previous day lows are hardly taken out. And it would be an anomaly, because just imagine we trade these tight ranges. I'll remove these joints. And जब भी हमें tight range close देख रहे हैं, तो we are essentially anticipating कि ये breakout होगा and it continues to move up. So technically, your ideal stop is always previous day low, because it violates that trade idea ही खत्म हो गया है. So it makes both technical and mathematical sense, because previous day low, because हम contractions trade कर रहे हैं, it is usually very tight. And how you enter it is again a different story altogether. But your stop loss placement can be fixed from now on. Goldium, a recent example. Now, assuming you bought it here, just see, previous day low was never hit. Again, you bought it here, previous day low was not hit. This was a very big move. And now just assume you, when it broke out, you were confused. कहाँ पे stop loss लगाऊं यार? 2-3% का लगाऊंगा तो size up बहुत कर पाऊंगा. So you choke the trade. You don't give it the ideal time and the structural. Your stop loss does not make structural sense. So whenever you buy a breakout, your stop loss should make structural sense. This is what happened in Goldium. Copper. So the same concept applies in any asset class. So it broke out here and you bought it. You bought it here. I just remove the drawings. Yeah. Here, you could have bought it here. But the previous day low was never hit. Same. Previous day low was never hit. And it continues to move higher. So when your stop loss makes structural sense now, it gives you conviction. So now you know, we will go through a lot more examples, but अभी आपको पता है that if you know इसके आगे मेरा tradable idea ही नहीं रहेगा, it does not make sense to hold it technically, then you'll exit. But until then, you'll continue to hold the trade. Now, when you see such falls after it moves down, people who had bought here and placed the stop loss at day low, they'd be stopped out. But उनको ये नहीं पता that the asset is still in base formation. You cannot be very picky in stop loss. You have to give it the space and the breathing time it deserves. Similarly, coach and ship, a big winner for many of us.
One question.
Yes.
In the earlier slide, so if the structure gets failed, so you're saying stop loss should just where the proper structure is breaking out of a structure. So we anticipate that the structure will break out of this tightness, but it's a chance, right? It might either break out or it might even squat or come down.
Yes, that is why we have a stop loss.
That's why you have stopped. Okay.
And see, I because I've interacted with several traders. Many new traders, they blindly trade these tight ranges, but the overall structure should make sense. You cannot just buy any tight range, and how you buy within the base is also very important, because you need to spot the right entry or the right bar to enter so that you don't get whipsawed. Right.
Okay. Can you just, when you say, so tight ranges are there many places. Can you, the point that you said, a right tight range, right? How would you define that one? Maybe you explained it before. Sorry, if you can just please explain that once.
Can we connect after the session, or after I've discussed all the examples, because
Sure. Okay.
that'll take a lot
Yeah.
of time, if that's
Okay.
okay. Okay.
Yeah, that's okay.
Okay. So coach and ship, the same concept. You buy it at previous day high. We'll keep it as simple. You can buy it anywhere. You don't even have to wait for the previous day high to be broken. Just buy right at the open. You can do that. You can build slowly. I have done that several times, wherein I don't wait for any level to be taken out. I just buy it because I know if it has to move, it will never take out the previous day low. So I have a defined stop loss. I'm managing my risk. I'm only taking partial position, so that that this is because I have conviction in the entire system. Same. It continues to move higher without violating the previous day low. So when you know that, yes, this is the technical sense, this is the technical level, if broken, it my view will fail. So it gives you a lot of conviction. It removes a lot of noise, a lot of you're never confused, and you always save your mental capital. Because see, I think I posted this on Twitter as well. As traders, we have to take a lot of decisions, but it is not necessary to take a lot of decisions. You just have to build systems. Building systems take time. You have to define a process for yourself. Post that, there is hardly a chance that you'll be confused. You just have to continue to refine that process, and until or unless you have that process, you'll always be confused. And you'll see someone posting a chart, posting a very high allocation on a single trade, and you'll feel like, yeah, am I even a trader? Am I even good enough to do this? If he can do it, why can't I? See, ये बाकी सब में बहुत अच्छा लगता है सुनने में, अगर वो कर सकता है तो मैं भी कर लूंगा. बट वी आर नॉट हीरोज, वी आर जस्ट ट्रेडर्स. We will lose 7 out of the 10 trades we take. So we don't have to act like heroes. We just have to preserve what we have. And to do that, we need systems. So this is just a small piece of that system, and I hope you use it. UCO Bank, the same concept in 2010. So it broke out of this range. Previous day low was never taken out, broke out, never taken out, never taken out. So do you see the same thing repeating? So till now, whatever you see, the previous day low seems like a level that if violated, your trade idea fails. So this gives you a conviction to hold on to a trade. And also, as the stock moves up, it gives you a chance to trail your stop loss partially to a level wherein you're not choking the trade also, and you're holding on to that trade. Like, just I'll just give you a quick example. In, I think, yes, we'll just discuss Masdaq, favorite stock for many people. Now, you bought at previous day high and your stop loss was at previous day low. When the stock breaks out, it hardly when it breaks out from a good range, it never looks back. So that is your idea, that is your foundation to move your stop. अगर वो कभी आता ही नहीं है अपने ब्रेकआउट डे के नीचे, यू कैन ऑलवेज मूव पार्ट ऑफ योर स्टॉप लॉस टू मे बी द ब्रेकआउट डे लो और द ब्रेकआउट लेवल. You can do that. You can be creative around that. You can study a few 100,000 charts, and you can always make a system wherein you trail your stop loss very fast to reduce the net impact of that loss. So you bought it right here. I just removed the points at the previous day high. On this day, previous day low was never taken out, and it continued to move up. This also applies in currency pairs. This is Euro USD from 2007. And I used to trade these currency pairs earlier when I started trading. So yeah, I know that the same concept works here as well. Breakout day, previous day low was never taken out. And all these are daily charts, huh? Never taken out. Now, a good example. If I ask you, if you had bought on this day and the stock retraced in the next 2 days, what would be your reaction? Be honest, huh? How would you have reacted to this? If you had, a huge size, or you would have a random stop loss, like, let's say, yeah, exit in panic, correct. So see, you bought it here, it moved up
Related
strong.
at cost.
Exit, exit at cost, okay. But just ask yourself, did you give the time for the trade to play out? Just 2 days of action and you are already out in panic. This is because you have not studied enough winners to understand this, that my trade idea would be invalid only if the previous day low is breached. You can always move part of your stop loss up, and trust me, I would have moved a piece of the position, let's say 20-25% right at the breakout day low, and I would be stopped out of that position. But I never close uh, I never close a winner just because I panic. So and why I don't panic? Because I know that my trade would be invalid only if the previous day low is broken. So again, a good example to make things clear that technical and mathematical sense can go hand in hand, and this protects you from getting whipsawed. Rajesh, you are asking that if the previous day low is more than 3-4% away, do you still take the trade or skip it? See, many a times, yes, the previous day low is very far away, but now this is where your creativity comes into play. You have to take entries in stock wherein you can place tighter stop losses. And see, 4-5% is not, again, it's not a very big stop loss. You have to be okay with sizing up less and giving the trade enough room. Because see, if you place a tighter stop, there's a guarantee that you might lose money, because we are only right 30% of the time. And even if in the 30% we choke that trade, it is going to end up in loss. So it's better to give room to your trade and let it function, even if it is a little wider. But don't go beyond you know the normal ATR that the stock has. Let's say the ATR percent of the stock is 4%, and it's telling you to place a stock 6, let's say 6%. Then try to place a staggered stop or avoid taking the trade altogether. Okay, but never let go of a trade just because of the fact that you have this bias that इसका stop loss 5-6% है तो मैं नहीं लूंगा. But if you go and see all the winners, these winners don't respect your 3-4% wala ideology. They can move up even if the stop loss is 8% wide. So you have to respect the structural volatility of the stock as well. So the previous day low is just a framework. It is you who has to manage your entries in a way wherein your average remains comfortable. RVNL, again, a big winner. And I kept this intentionally to show you that this is not a short way. You will still take stop losses. Like here, you bought it here, it moved up. But now, what would you do if the stock is not moving for 6-7 days? Personally, I would always move up my stop to a level wherein I don't lose more than 0.7 hour or 0.5 hour. Because I know most of my winners don't take this much time, even if they're within the base. So yeah, you would have placed your stop loss way up and reduced your net impact. But थोड़ा बहुत तो loss लेना पड़ता, and it would have hit your stop because यहीं पे structurally trade invalid होता. Then again, it gave you a chance to enter here, never hit the stop, but you would have reduced your position because again, यहाँ पे it did not move for the next 5-6 days. But then it rewarded you for your patience. But structurally, trade तभी invalid है when the previous day low is taken out. Reliance from 1999, bought it here, bought it here, bought it here, but never did it, breached the previous day low. But yes, you'd have reduced your position to cut the net impact, or to reduce the net impact to 0.7 R. But yes, it did reward you. Then again, you bought it here, a very tight stop. It started to move. You could have entered again here. Again, it continued to move higher, but never moved below the previous day low. So does this add conviction? Does it show you that if you place stop losses like this, you would have more confidence to hold that trade, to hold that position? Reflex, again, the same thing. Place the stop at previous day low, let it move. But again, you would have reduced your position here because see, we are traders, we are here to manage risk. So even if you reduce your size, you are only reducing part of the position. You can always add more. Even here, if you add it, it never hit the previous day low. Bought here, never hit the previous day low. यहाँ पे स्टॉप हिट होता, बट अगेन 3-4 डेज में आप अपना पोजीशन ऑटोमेटिकली रिड्यूस कर ही देते. सो व्हाट आई टेल द मेंबर्स ना, T+2 वाला अप्रोच फॉलो करो. T+2 में T is the breakout day and wait for the next 2 days. If you see the action to be constructive, if you feel it is constructive based on facts and the data you have accumulated, तो होल्ड करो, वरना रिड्यूस द पोजीशन. इट इज ऑलवेज बेटर टू बी इन अ पोजीशन वेर यू लूज लेस, rather be in the hope that yes, I might earn huge in this trade. Because अगर 70% हम लॉस लेने वाले हैं 70% of the times, then might as well reduce the impact. Same concept. R power 2024 recent example, never look back, never hit the previous day low. Infosys from 1998, do you see the same concept? Nothing new. And I think this was the IPO. This was the IPO. Bought here. Previous day low never taken out. Bought here, never taken out. You could have added here, never taken out. And now you know how to trail it also. Trailing becomes easier when you enter at the right spot. Entry के लिए maybe we'll keep some other session, but अभी के लिए, even if you enter the previous day high, a random entry, and place the stop loss at the previous day low, even then it works. This is your trading system. Just go and verify yourself, study 1,000 charts, and you will see this working. You just need to know when to pull the trigger. That is also very important. So this is a stock from the US markets, and this is a very recent example. I think ये अभी कुछ हफ्ते पहले हुआ है. This is a 100% move, huh? So if you bought it at previous day high, previous day low with stop hota, 100% move within a few days. Structurally, the stock is nice, showed power, tight हुआ, a very nice structure. But यहाँ पे इंट्राडे में volatility आपको देखनी चाहिए थी. It moved up from the bottom. So you have to be smart enough to handle that volatility, but place the stop loss at a level wherein the trade is technically valid. SJVN 2023, just see, buy at the previous day high, a random entry, and a fixed data-based stop loss of previous day low. Imagine how much you can size slowly and gradually. You don't have to wait for a breakout to happen. You don't even have to wait for the structure to complete. You can slowly build your position using this system. And trust me, slowly building position is far more scalable than building everything at once. Because we are not here to trade with a small capital at all times. In the next 4 5 years, 6 years, we will add to our capital and trade with a much larger capital. So why not build our foundations around the concept that is far more scalable, because it takes a lot of time to unlearn things, I feel. So yeah, same here. Copper again. I think we discussed copper from 2006, a recent example of the same asset. It continues to move up without taking out the previous day low. We have a lot more examples. Again, a stock from US markets from 2006. See, the concept remains timeless. Never hits the previous day low. And trust me, when you see this is a shakeout. You can even enter here if you have that system. You enter here, previous day low is never touched. So see, many people, I think someone asked me who's not familiar with all these concepts of volatility contraction, and he asked me, if I buy it here, why cannot I buy it here? I say that you'll have to wait for a lot of time for it to contract because the stock has already moved up. But later I realized that this is also not a wrong place to enter. Your see entry is one of the most overrated things. How to enter, where to enter. You can randomly buy as long as you know where to place the stop loss, because as long as it is structurally valid, you can enter. It's not necessary to enter right here. You can buy it here, placing the stop loss at previous day low. So what happens now? ये system, ये process, it is easy to follow for new traders. New traders find it extremely hard to identify those zones wherein they can enter precisely. With time, with the right mentor, they can do that, but it takes time for to understand these things. So even if you have a very bad entry criteria, if you follow the process, it is still workable as long as you get the foundations right. This is one of my trades. I've shared this on Twitter also. Never hit the previous day low after breakout. Never. Never look back. ITI from 2014. Never hit the previous day low. You just have to identify the right structures where you can pull the trigger. That is your job. Post that, just leave everything to the randomness of the market. Even if it is a wider stop, take it. Take it with a small size and add to it. This is not a rule. This is not a, this is not something that everyone has to follow, that you have to size up. No, you can scale up slowly. And see why most of us are in the habit of scaling, entering everything at once. See, all of you have actively started investing or using the system after 2020 or 2021, wherein you saw stocks moving right after you bought it. Go and study stocks from 2018 or prior to 2014. You will see that you won't find such very fast move right away. The moves took time. So you have to normalize this, that you cannot buy everything at once. It is okay to scale up slowly. EPAC, this was the IPO base, I think. Yes. So see, a random entry. I don't think this is structurally valid, but even then, the concept applied. But no, we'll not get into that habit of not trading good structures. But yes. Now see, you bought it here. Previous day low was never taken out. Visa. This is a stock from the US markets. 2008 का example है ये. I deliberately kept a lot of examples from the past so that you don't feel कि यार ये recent examples दिखा के he's clouding our judgment. This happened in the past. This is happening right now, and I'm assuming this will happen in the future as well. Previous date low never taken out. Never taken out even here. So even this day, it did not take the low. You would have taken out a piece of the position, but yes, it did keep some part. And इससे हुआ क्या? Most of us, when the stock consolidates and does not move in our favor, we panic and exit कर देते हैं कि नहीं यार waste कर रहा है time, we'll find a new opportunity to trade. But more often than not, we are proved wrong and थोड़ी देर के बाद वो move करना शुरू कर देता है. So that is the reason we always prefer technical invalidity. जब तक trade technically invalid नहीं है, we continue to hold it. पराग मिल्क सेम 2023 में हुआ है. EMS, this is a trade that I took. Same concept, previous day low never violated. CESC from 2017. Do you see? You bought within the base. Maybe you reduced some position when it did not perform. You added back here and it continued to move higher. But you, पता है, you spend this entire time sitting in the stock. People might say that the stock is wasting your time. You should have exited. See, you never know what the stock will do. So always exit partials. Never exit entirely based on your feeling. If this low was violated, I would have exited. It did not violate that low. I was still holding it. Continue to hold it. I, JG Chem, EWFIS. This is a trade that I took. I bought it somewhere here, I think. Yes, this day. Previous day loan never taken out, continues to go up. So as long as the trades make structural sense, you hold it. We'll just quickly run through the other examples. GME. I think there's a movie about this stock also. Dumb Money, I think. Yes, it's on Netflix. Yeah. GameStop, yeah. 2020. So bought it here, moved up, continued to move up, but never violated that low. You could have exited partials, but continue holding that trade unless that it's structurally invalid. Bought here, it continued to move up. Could have sold some partials. Again bought. Never looked back. Never looked back. So whenever it breaks out, it never comes back to the previous day low. Nucleus. I think there are a lot more examples. Bitcoin, then Bajaj Auto from 2012, HUDCO from 2017, an IPO base. Again, a crypto coin basically. The same concept applies here. Gravita from 2017. So there are a lot more examples. You can go through all these and see for yourself if this works out for you. I hope you learned something new here and I hope it added some value because it's a Sunday and you took out time to attend this session. If you have any other doubts regarding the charts we discussed, you can ask right now or we'll wind up and you can join the Telegram group. I'll share the link because this group I'll dissolve this group post this session. Post I've shared the PPT. And yeah, for further updates, you can join the Telegram.